Asset Management, is joining us. Aishwarya, good afternoon. US has cut down tariffs on China, saying that even the rare earth metal issue has been settled. So what do you make of this, and what does the trade negotiation sentiment mean for India?
Good afternoon to you and all the viewers. Obviously, like this week had a lot of big events planned, right from Fed, from Trump and meetings about this tariff thing. But I think slowly and steadily things are progressing well. We are seeing majority of this are coming through as what market was discounting through. And back home, if you look at this month, has been some respite for the bulls. Nifty is up almost close to 5% in this month till date. And we believe around 4.5% number for small cap and mid cap and BSE 500. So I believe this is the whole narrative which is changing post this quarterly result season which started. Obviously, the terms of the trade is being dictated by the geopolitical global scenario on tariff and thing. But what really moved market in this last month was how this quarterly seasons actually panned out. The expectations were pretty muted, and I believe there would be like close to one third of the results which has been released so far, and they have come out to be slightly above expectations. So disappointment is pretty taken care of, and that's what we are saying that this month so far FIs has actually been net buyer, roughly around 10,000 odd crores after consecutive 3 months of 40, 45, 35,000 crore of selling each month. So this whole thing is playing out that possibly FIs are now finding that the earning recovery is coming, or possibly the earning cuts which they have witnessed in the initial last 2, 3 quarters is possibly started plateauing through, and we might be heading toward earning recovery. So this is what, if you see this calendar year, we're almost 17.2, $17.3 billion of outflows we have witnessed, and after this month we are seeing that recovery happening through. Coming back to what you're saying on obviously we saw what happened with China, and there's the early signs are all pretty encouraging. But if that played out well for China, then the probability of it playing out well for India is also high. And if that happens, November could be a very starting month for the investors.
Oh, a majority of the FI allocation went to China instead of India. And now with this puzzle piece getting solved for China, do you think that they have more levers in place instead of us, where earnings growth have still been lacking so far as of now?
So we completely believe what you're saying. I believe you see the rotation of flows globally has happened. The initial money went to China and from US, and then we saw even other frontier markets like South Africa or possibly Taiwan and all that got a big chunk of FI's money. India has been on the side where haven't seen much of the flows. Actually, if you look at the allocation of FIs to India as per the MSCI index, are running almost 3.5% of underweight. That number we have witnessed last in 2009. So that was the kind of sentiment FIs were riding on for India. And as you said, like the primary reason obviously was the valuation, and second was the earning cuts or the cuts in the EPS number which we have witnessed. So we believe that was phase one where the higher valuation led to the earning cuts. Now, if you see the trend both in the cash segment of FIs and even also the derivative segments, we are believing that the trend is slightly changing, right? Obviously, we saw some flows coming in the month of October so far, and even the FI positions, they have been seeing shorts being covered much. I think it has all to do with the way this quarter has panned out, and they expect that this is the bottom of the earning cut cycle, and possibly India is still not very cheap compared to other emerging markets or other developed markets. But historically, we are at a very comfortable positions, and if we have this earning caking for us, apart from all the macro and the government-led reforms and RBI-led push which is there, possibly the money might start flowing back to India in the coming months. And I believe the biggest caveat or the inflection point would be the tariff clarity between India and US, which might happen anytime in this month. So all in all, when they come to potpourri, things can look well for India from that perspective.
No, okay, okay. Aishwarya, but coming from the earnings front, of course, everyone is looking for a double-digit growth for the second half of the fiscal year. But how do you make sense of the Q2 earnings? And of course, from a sectoral perspective, what are you finding? Where there is a bit of a growth visibility from here on?
So we have been, I would say, we are in the early phase of quarterly season, and I believe there is a very clear trend that the disappointment has been limited. The one sector which was bound to disappoint was BFSI, and it to everybody's surprise, BFSI hasn't done that well as it was expected to do in this quarter. The NIM compression has been taken care of, the credit cost has been well maintained, the growth is very much there across large private banks, PSU banks, and most importantly and excitingly is in the SMID segment. So I believe, obviously on the high double-digit growth for, second H2 of FY26, I believe the larger part of the main heavy lifting will have to be done by BFSI, which is almost 35% of Nifty 50's share. And if you look at the way the growth is happening, right, the credit growth has moved from 9.5 to almost 11%, a 10.5, 11% number, which possibly will go to 12 to 13% by FY28. And the impact of the NIM contraction is possibly behind us. And at the peak of the cycle, we believe earning growth for BFSI coming from a trough will lead that double-digit growth for not only in H2 FY26 but also in FY27. So there is one segment which we believe which is taking a lot of attention is banks. And at Fident, we believe the one area which we believe can create a lot of alpha is small and mid-sized banks. If you have seen in the last month or so, the kind of FDI which has poured in, right from Sammaan Capital or RBL, IDFC First, or like similarly many others, almost $7 to $8 billion of FDI has come where this has been taken stake. Blackstone took stake in Federal, things like that. I believe there's a massive re-rating can happen because at the same time we are seeing those earnings cycle upgrade for these SMIDs. And on account of the selling which has happened, the valuations of the whole pie is not very, very expensive. So I believe all trifecta are coming in place, which can really lead to re-rating of many of these SMIDs and other NBFCs. So we are very positive on this space. And we believe that could be one sector where investors should be very, very keen or should be watchful of.
Okay, okay. Aishwarya, we did see that L&T reported numbers today, and now the street has been quite optimistic on the private capex finally turning a corner. But what is your assessment on the entire scenario?
So it was very encouraging to see the numbers. Not only L&T, even BHEL reported very good executions. When you look at the order book, that sound pretty encouraging and that was pretty broad based. And if you look at the trend, I believe the last 3 months on private capex is slightly picking up, and we are seeing that number going to the mid-teens growth. And L&T is an harbinger of the private capex. That's an early indicator. And private capex is one particular area which has been missing the spark over the last 2.5, 3 years. So I'm not reading too much into this. I believe these are good green shoots. If the trend continues, possibly the one area which is missing will help the economy to move forward. One more point, if you look at, obviously, government has been spending aggressively, the central government over the last 4 5 months. But at the same time, the state government number of spending is of FY26 is not different from what they were doing in FY24. So there is basically three area. One is private, another is central, and third is the state, and all have to really fire to make things move in tandem. So I think one leg on the state government is what which is a bigger trouble. Private capex has been an issue for the last 2 3 years. But encouraging order book, encouraging demand across thing. I think even if you look at the announcement in many of these results, whether it is cement companies, oil and gas, whether it is Reliance, Ultratech, JSW Group, all of them have announced a lot of capex. So one key thing which I took out from this early part of this quarterly result, that it is more of a capex-led growth quarter, where everybody is coming and speaking about their intensity to increase capex and play out in investments and things like that. That I believe goes very well for our earning growth to maintain those mid-teens for the next 2 to 3 years, alongside liquidity and easy and cheaper money available by RBI. So let's hope for the best, Lovisha, that this trend continues.
Okay, okay, okay. Shreya, also let's get in your view for AMC stocks because they have taken a knock after the SEBI's consultation paper on mutual fund fees. Earnings have become a risk now, but how would you suggest investors to approach this space then?
So if you look at, that was obviously a bit of surprise to the market, and that was visible with the way stocks reacted post that. But if we go into the history and see, we have seen every 4 year, 5 year, there has been cases like this. And if I remember last 2019 when we came out with a lot of this regulation which had such impact, and I believe 80 to 85 for 90% of that impact was passed on in the form of commission cut and things like that. So I believe, even in this time around, though it's very initial and this is more of a idea seeking rather than a regulation, but even if it get implemented in this way, the earning cut as it is, if it is not passed through, would be close to say 8 to 10% depending on the mix of those individual AMCs and brokerage and players like that. But we believe that their large part of it will be, passed on to the other stakeholder in the entity, like what it has happened in the past. And possibly the EPS impact, negative impact will be limited to around 3 to 5% kind of a number, depending on their ability to do that. But overall, Lavisa, we believe all of these regulations is basically making the industry more sturdy. The stronger players will be able to manage the show. A lot of the weaker players will possibly exit business, and a lot of this inefficiency will come out of the system. And this is also good for the investors as a community. So all these are welcome move. These are like tough things to digest, but once then there, things will move on. And I'm telling, I've been seeing this across space where which are regulated. Initially, it looked like very difficult task to manage, but with time and with the way of finding ways, things comes in place. So I believe this time it will also be no different, and AMC will come out stronger out of this.
Okay, okay, all right. All right, Shreya, with that, we have to let you go, but thank you so much for joining and connecting with us.
Thank you so much, Ravisha.